Here's number 10. Urban Outfitters rallying 9% on positive second quarter results and bullish analyst commentary. Wedbush upgrading the stock to outperform from neutral, the firm citing multiple factors including compelling growth despite a choppy retail landscape and potential acquisitions, not to mention the fact that they've got all that great looking stuff, Sarah.
They do. Number 9 is Corinthian Colleges rising 11%. For-profit education company saying it met a government financial responsibility standard in its latest fiscal year. Corinthian did not meet that threshold back in fiscal 2011, so this is a big deal, and if it had fallen short again, it could have been subject to additional monitoring and reporting.
Number 8 is Medtronic, down 2% after the medical device maker reported first quarter sales that missed analyst estimates. Medtronic saw weaker than expected demand for defibrillators and the infused bone growth product during the quarter.
Bob Evans jumping 10% today following its first quarter earnings. The company is backing its full year forecast and increasing its dividend to 31 cents. Bob Evans also announcing plans to open a new store concept. Looking forward to that. I'm a fan.
So is Matt Miller.
Delicious.
He's licking his chops. Number 6 is Zillow, down nearly 5% after announcing a $412 million share sale. The company and certain shareholders selling 5 million shares at $82 a piece. This sale comes on the heels of Zillow's biggest acquisition yesterday, announcing it would buy StreetEasy for $50 million in cash.
Number 5 is Home Depot, down nearly 1%, even though the home improvement retailer posted second quarter profits, sales, margin expansion, and pretty much everything that topped analyst estimates. It even raised its annual forecast. Shoppers, buoyed by the housing recovery, are spending more on projects, but investors thought, I guess, buy the rumor, sell the news?
Well, look how much it's run up so far this year.
Yeah.
The year-to-date chart.
On fire, though. I read those numbers when I got in the car this morning, and I was just blown away.
Well, pre-open, the stock was up. So, yeah, buy the rumor, sell the news. I mean, the news comes out that well. I guess you almost have to sell something. But I was at the Home Depot downstairs. There's one in this building. It's massive.
I was there this weekend.
Are people in it?
Are you kidding? It's jammed. That's why they guide up.
I was there this weekend. It was packed. Dehumidifiers, air conditioners, everything.
It's an awesome place. I bought a new set of screwdrivers last weekend. They're gorgeous. Gorgeous. Dick's Sporting Goods sliding about 8% today. The retailer reporting second quarter earnings and sales that missed the estimates. The company says it's facing a sluggish consumer environment and has cut its profit forecast for the year.
Number 3 is TJX, up almost 7%. This is a parent company of TJ Maxx and Marshall's clothing stores. It saw net income rise 14% during the second quarter. Shoppers there continuing to flock to the stores for discounts on designer goods.
Number 2 is Barnes & Noble, plunging more than 12% after its first quarter loss more than doubled as the company faced declining sales at its retail stores and from its Nook e-books readers. It still makes those, but doesn't sell them. And another blow, Chairman Leonard Riggio says he's ending a bid for the company's bookstores, so no more buyer.
No more buyer. Boy, no more bookstores either. They're tough to come by, even here in New York City.
Exactly.
All right. Number 1 stock, here it is, Best Buy, climbing about 12.5% today, the most in the S&P 500. Ooh, I hear the closing bell. The electronics retailer posting its biggest quarterly profit in more than 2 years. CEO Hubert Joly trimming costs and cutting prices to spur the sales. You hear that closing bell, and look at the S&P up about 0.4%. Curious because the Dow Jones is flat, and at one point the Dow Jones had been up today. You can see also the Nasdaq up about 0.7%. Nasdaq leading the way, as tech so often has been doing over the past month.